So, welcome to the Exit Advisory Team webinar, and today we are joined by two guests from Breeze Corporate Finance, Guy Harris and Nigel Winkett, and who will be joining Debra, Martin, and myself. And today we're really going to dive into what exactly it is that Breeze Capital do in helping companies prepare for an exit, and to look at a number of tools that they use as well to do that. So, first up, guys, welcome to the webinar.
Thank you very much.
And yeah, just quick overview on what it is that you do, and how do you get founded, and what are the problems that you sort of help with your founders and the companies that you work with.
Yeah, be delighted to, Neale. Breeze, kicked off in 2018 with a real desire to deliver a world-class service to SMEs, family-owned businesses looking for an event, an exit, or a buyout. And in the 8 years that we've been going, we've probably established now a team of 20 people, with the largest independent boutique across probably the East and West Midlands. And in that time, we've completed 70 transactions and delivered £1 billion worth of deal value. And I think when we kicked off, we'd probably be looking in the sort of 2 to 20 million. We probably operate more now in a 5 to 50 million sort of deal range.
Yep.
Our current average for a disposal is circa 17 million. Building a great business with great people. We've invested well in terms of the technology that we have available. We've got 4,000 buyer relationships now across the globe. So it allows us to get into the market really quickly and find interest and opportunities for potential clients. So I think using the 150-year plus sort of levels of experience that we've got combined across the team, that sets us well for taking clients on a very productive journey.
Yeah, and is there any sectors that you really focus in on, or are you sector agnostic?
I think we've got experience across a good number. The technology that we have allows us to get to know most sectors quite quickly.
Yeah.
But I think we'd prefer to have a reputation of being world class at doing the deal. In fairness, Neale, there's very few sectors that we can't really understand with the help of the client. I think where we really add value is that that emotional engagement that we pick up at the start and then right through the transaction and beyond with the clients that we work with.
How would you say you help companies prepare for a successful exit?
So the readiness proposition is something we put in the marketplace specifically for those businesses who either consciously or unconsciously aren't ready for their best exit. So they may come to us asking to go to market and go through a transaction, and through a series of interactions, we'll find out that they're probably not in the best place they could be, and there's more value on the table. And there are others out there who are kind of thinking about exit in 3 to 5 years, but don't really know what that means, haven't really got a plan for it. And those sets of clients are the people that we can sit down with and say, if we put a plan together, working with you, if we bring your professional network around you and the experts, we should be able to put something together that will increase the value, make the transaction easier, reduce stress, ideally reduce cost as well, but help them in that whole process prior to actually getting them to the transaction.
So if somebody said, I want to exit next year, would that be too short a runway for you to kind of make a difference in value?
No, I think we'd always start the conversation with, I wish we could have started last year, but we are where we are. So there is nearly always something to do to create value and to reduce risk, even on a short term. We could definitely do something within 12 months. We could probably do something in 6 months, but some of the more strategic and real value creation tools that we use are better suited to 18, 24 months and a little bit more. So it's a glib answer, but it's a sliding scale. Tell us the time that you've got to play with, and that's how we'll be able to put together the optimum program.
I think, Debra, just it's worth adding as well, once we understand what their magic number might look like, then we can start to appreciate the level of work that might be needed in order to get close to that number in the market.
And what about, you touched upon sort of the value creation tools that you use. What's involved with that?
So we try and organise that into three Ps really, and that's as much to make it really simple and easy for us to understand as much as anyone else. But if you think about three things that could be done for any business to help them go forward, first is to professionalise the business. So that's some of those classic things like, certainly in an owner managed business, to iron out some of those quirks, foibles, your personal approach to running the business, making that much more professional, much more visible, more process, more operations, that kind of thing. Making sure that you've got an appropriate team around you. And with an exit in mind, that might mean additional people that need to support you or replace you as you develop the team going forward. So in the professionalized kind of column, there's an awful lot that can be done. And again, that one, the earlier you do it, the better you're going to see the results from that process. The planning piece is where you can start to really improve your net gain on exit by doing some appropriate tax planning, both on the corporate side, on the personal side, looking at shareholders that are in already, but also thinking about if you need to incentivize and create some new shareholders in the new team going forward. Those are things that do take 12, 18 months to actually wash through and to be effective. So they need some planning time. And then the last one, which is one where we get really excited, is about performance. So how can we look at the business and help increase EBITDA through efficiency optimization, but also help in terms of top line growth? So how is this business going to grow? Where's the revenue going to come from? What new markets, what new services? Those are things that investors will be incredibly excited about, not just on transaction, but after the few years after transaction. So being able to articulate a really powerful and credible growth plan is something that's really valuable for your own business anyway. Why wouldn't you? But certainly for an investor, and being able to take them through that story, that's where a lot of credibility, but also strategic value is built.
It's selling the future, isn't it?
Absolutely.
To the next owner.
Yeah, one of the things we talk about is there's no point collapsing at the finish line. That's not going to help anyone. What you want to be able to do in that story is sprint through it and off to the next part of performance and growth for the business. So that at a point of transaction, they can look at it and go, we know exactly how to grow this business, where the opportunities are, and that's where you're going to get real value for the business.
Let's turn now to the situational report and how that really helps a company understand exactly where they are right now and where the gap is. So just take us through, how do you position that with a company when they come to you, and then practically how do you use it with them, and what does the outcome of that look like?
So the situation report is something that we've kind of designed on years of experience of engaging in this process. And it's designed purely for that business owner or the shareholders after it to be in a really good decision, to consciously know all of their exit opportunities, the size and shape of the journey that could be in front of them.
Yep.
So that they can literally decide whether they pursue that, go forward, or actually think about a different plan and a different strategy. It's there also to dispel a lot of anecdote and myth, because I think every one of us knows someone in business somewhere who did something like this and it didn't go well, did go well.
Yeah.
Those guys are awful as investors. These guys are good. All of that kind of story, myth, and anecdote needs to be dispelled so that the business owner gets some really good, solid, real advice. So situation report starts with a process where we sit with the business owner and the shareholders and say, well, it's crass, but what's your number? What number are you trying to achieve and by when? Because that should be the North Star for everything going forward. And once we've got clarity on that, we can then talk to them and say, well, okay, that's really interesting. Are you aware of every type of deal that there is out there in the marketplace for someone in your position at the moment? Do you understand MBO? Do you understand private equity? Do you understand investors that might invest now and want you to go on a journey in all those different scenarios? Even if everyone thinks they know what those are, it's really worth getting under the skin and asking some of those questions so that everyone has that clarity on what's possible and what might happen. Once we've done that, we can then give them some market appraisals. And this, again, is a very interesting bit for the business owner, because this is when you'll get clarity on what you might be worth at the moment. So they'll share some of financials with us. We'll take them through a diagnostic to look at different parts of their business. And through that lens, we can say, we think your business at the moment, based on what's happening in the marketplace for your sector, for a business your size and shape, this is the kind of valuation we're thinking about. So they can lock that in their mind. Sometimes that matches their magic number. Sometimes it doesn't. Sometimes it goes way beyond it. But what we'll also do as part of that discussion in the situation report is to say, but this is where you could be. Yeah. So we've looked at your business. If this was moved, if this was improved, if this was changed, you could be in a place in 2 years' time where you're worth this much. So what we've got there is a delta from where they are now to what could be possible in the future. It's not pie in the sky and it's not guesswork. It's based on market intelligence, the sector knowledge, and what we know investors look for. We can then deliver that up to them and say, here you go, this is what you're worth, this is what you could be. But rather than just admire that opportunity, that's when we can then say, if you had more recurring revenue, if you had a senior management team that were more this shape than the other, if it didn't all come from one or two client relationships, there are some classics within that mix that we know investors will be looking for, and that will move the strategic value of that business. So all of that is wrapped up in a situation report and a debrief. So as I say, that client at any given point in time should know almost everything they need to know to be able to make a good decision about the future.
And what commitment, if any, is there that once they sat down and gone through the situation report with you, is there ongoing to working with Breeze?
So we've chosen, I think in our wisdom, not to make that a contractual obligation. What we really want is people to trust us as we go through the journey, see the value in each stage. They're perfectly free to take that report and go and execute it themselves, and good luck, and there would be no kind of hard feeling there. Yeah. But we would really like them to say, well, how can we work on it together? Can you help me with some of the gaps I've got in my network? Can you introduce me to people where I'm needed? But let's work on that together over 12, 24 months. And once we get through that process, then obviously into the transaction would be the same kind of thought process, really. If we've shown our value, built the trust, then why wouldn't they want to go to market with us at the end of that process as well?
Exactly. And typically, how long does it take to go through the situation report with a company when you first start meeting them?
So that's a relatively quick process. So if we can get some of the top line financials, and if they can spare probably a day and a half themselves, we can get you through that process in 4 to 6 weeks. Again, we've designed that to be a quicker process rather than a long drawn out navel gaze, because it's such a good place for the business owner to be, to get that head start and that knowledge.
As you say as well, one of the 3 P's are all about planning. If you can't take a day out to really get your plans in place and understand exactly where you are right now, certainly for most people who have never done this before. So you'd imagine, and I think I like your point, is because there's an assumption that everyone might know what private equity is, or an MBO, or a strategic sale, but for most, probably haven't a clue what's involved, what the upsides are, the downsides to the different transactions. And I think, again, obviously what we're looking to do with the exit advisory team is to help people level a playing field, and to have a team of advisors around them that can make it more advantageous for a seller to achieve their best. I think, do you say their best deal or their best exit? I like that point.
But your point there, Neale, around a team of advisors, it's very, very important that if we can get the lawyers, the bankers, the accountants, the tax planners, the wealth guys all together, any strategic advisory support, so that we're all on the same page and motivated. And if we've got things to do, we've got time to do it. We can start to shape and put the actions in motion rather than they becoming rushed at the end of a transaction. So I think that's a step change for us in terms of that togetherness at the start, rather than catching up as we go along.
And it has to be built on trust, and therefore having a team of trusted advisors around that people either are referred into or feel like, okay, you've got the chops to do it, is so important. So if someone's interested in listening to this webinar, what's the next step in terms of getting in touch with you guys and being able to complete the situation report?
Yeah, I think I guess what's important, is to have that initial, whether it's a Teams call or a face-to-face introduction really through probably myself, in fairness, Neale,
Okay.
have those conversations, really trying to ascertain, what the clients currently are, where they've got to, and then determine just whether the readiness program is actually in the right place right now, or excuse me, or what else might need to be done in order to better understand what the situation looks like. Because I think the important thing is that we need to be sure that we can deliver and meet their expectations.
Yeah. Definitely. Well, it's great to have you join us today. I think it's highly valuable to take away the 3 Ps, of professionalism, planning, and performance for all of us to bear in mind. But my key takeout is that it's never too soon to start planning for your exit and to put the right amount of time aside to do just that if you really want to achieve your very best exit on your terms. So, Nigel and Guy, many thanks for joining us today. It's been a pleasure having you on the show, and so many thanks for your insights.
Been great to talk. Thanks, Neale.
Appreciate that. Thanks, Neale. Thanks, Debra.
Yeah.